Strong earnings from chip maker Intel helped push blue chips back above 10,000 today. Can we expect another major market move from earnings at tech giants Google and IBM, which both report tomorrow? CNBC Silicon Valley Bureau Chief Jim Goldman joins us with the rundown. Jim.
Hey, good evening to you, Michelle. Yeah, you know, one earnings report, no matter how surprisingly good, does not a trend make. And while Intel helped power the Dow to break 10,000 today, tomorrow's reports from Google and IBM will certainly help determine whether investors can hold 10,000. Like Intel, Google shares have rallied heavily into its earnings report. In fact, Google keeps reaching new 52-week highs in the company's public pronouncements about improvements in ad spending and those recent mobile Android operating system wins with AT&T and Verizon. Well, they seem to juice these shares even more. And then there's IBM. The company increased full-year guidance in July, and its gross margins keep expanding. And yet, like Intel, its share price rally has really lagged the rest of the market, leading some to believe these shares might be ready for a breakout, which is what we're really seeing with Intel. The bottom line was impressive, but that top-line performance with a corresponding increase in margins, well, that indicates that consumers are indeed ready to spend again, and that might bode well for AMD, which reports tomorrow as well and rose nicely on the heels of Intel's report, and which might be another beneficiary also from Windows 7 from Microsoft next week. Its earnings a week from Friday, by the way. A pop in enterprise spending, well, that might be on the way as well. And speaking of next week, we'll get numbers from Apple, Yahoo, eBay, and Microsoft. Guys, let the games begin. Back to you.
All right, thanks, Jimmy. Hang on for a second. Joining us now, Bob Froelich, Senior Managing Director of The Hartford. Our distinguished panel still with us. Bob Froelich, take a whack at this, Google, IBM, et cetera. Earnings are really important. Allison Deans has been talking about this. Yeah. Give me a whack at that. Where do you see it? Because if we don't get the earnings, we're not going to stay above.
Listen, they're going to surprise on the high side. It's a story about what's going on around the globe. What we forget is so far in 2009, 43 countries were still cutting rates. That's very stimulative. That's what we're seeing with the Intel number. In addition to that, there are jobs outside the United States. Japan, Russia, Brazil, Australia, Canada, Korea. The places are growing. Guess what? They're using that money with the weak dollar to buy stuff right here. I think the earnings story is going to be a dynamic story. I think tech and financials are going to be the two best places to be. This train is still going. It's going to 11,000. 10,000 was just a necessary stop along the way to 11,000 on the end of the year.
Allison, what are you looking at when you look at IBM and Google? They're one of the few technology companies out there actually expected to post revenue growth, not less worse numbers, but actual growth. Can they power this train any further?
Yeah, my sense is technology in general can power the train further. If you look at overhead reduction in the S&P, technology actually did more cost cutting than any other sector, and they're showing the fastest turn in revenues. So they're the area that I see having the most likely positive earnings surprises across the board. Plus, they're big beneficiaries of the lower dollar.
Ron Kraszewski, I've got one just perfect for you. Barack Obama likes to talk a lot, right? Our president is quite a communicator. How much credit does he deserve for this, Dow 10,000?
Well, thanks for that loaded question, Larry.
Is this the Obama rally?
I just want to say, right, Michelle took the words right out of my mouth. I just want to see if you were alert, and now I'm waiting for an answer.
Bob's dying to answer that one, too.
Yeah, Bob, you want to take that one? I frankly think that no current politician. Well, let me try it a different way. $11 trillion of stimulus. If the president had anything to do with that let's be honest about the underlying pinning of this rally is unprecedented government stimulus. So to the extent that we have
from the Federal Reserve or from the federal, or are you talking about that $800 billion boondoggle, or are you talking about the Fed printing money?
I'm talking about both, and so to the extent that you want to separate the president from the Fed or whatever, I don't think that our viewing public really looks at that. So the sitting president, to the extent that we're just running the printing presses like mad, in the short run, I think is very stimulative. It's the long run where someone else may be questioning what we did. This reminds me a lot of 2002. Take interest rates to zero, put liquidity up to liquidity that you can't be in anything other than equities or risk trade. I mean, what we did in 2000, are we doing it again? I mean, someone should ask that question.
All right, so Bob Dole, money does matter. At least in the short run, it may be positive. Long run's probably going to bite us in the keister for inflation. But I want to bring in another sector here, the V-shaped recovery, Bob Dole. Now, you've heard Allison. She's very strong on the profit story. What about the V-shaped recovery, Mr. Dole? Is it intact? Is that what this market rally is about in part?
I think it's not. If it was, the market would be a lot higher. Look, compared to a year ago, we're still hardly making a move. Everybody compares it to where we were in March. That's when we were looking at a depression and a nationalization of the financial system. I still think we're going to have a recovery that's noticeable but subpar compared to earlier ones. We have a lot of headwinds: employment, consumer, debt pay down, deleveraging.
Bob Froelich, V-shaped recovery. I want to give you a whack at that ball.
I think it's a Y. I think it's going straight up, but not everyone's going to participate. There's going to be some winners.
I haven't heard that one
Well, no,
yet.
it isn't. Yeah, it's not the L or the
no
W.
V,
It's the Y. It's going up, but not everyone participates. Financials, energy, technology. I think retail and consumer discretionary is going to be a good place. And for someone that has a tough stomach, get in healthcare now. But don't buy the rumor of what's going on with healthcare.
Get in healthcare now? It may be nationalized.
Think about healthcare in the mid-'90s.
In 90 days,
gotten a
it
lot
may be over.
farther than Hillary Care ever got.
Who made money?
It may be a public utility in the next 90 days.
Don't buy the hype and buy the rumor. 2 years from now, if you're in healthcare today, they're going to think you're the next Peter Lynch. It's a place to be. It's the front end of the
Bob Dole,
Y.
are you buying healthcare?
Yes, into weakness, I think it's a good thing. Markets hate uncertainty. When the uncertainty gets resolved, and it will at some point, not too far from now, our view is these stocks will pop.
Allison Deans, what about healthcare?
That's not one of my favorite sectors. I like
not?
much more the cyclical areas.
Why not? Are you afraid of the government intervention, unlike these guys?
I am worried about the government intervention and what that could do to their profits.
Well, you have to be. I mean, you just have to be. But let me come back to Ron. You look down the list of the market leaders, Ron. It's got recovery all over it. It could have V-shape. It's banks recovering, okay? Then go for it. Materials, commodities, energy, industrials, and retailers. We had a very good retail sales report today, excluding that goofy cash for clunkers car thing. The rest of that report was terrific. So I want to ask you about the V-shaped recovery, because the stock market is telling us it's going to be stronger than the skeptics think. What do you make of it?
Well, I think it's V-shaped up to this point, it appears to be, but it's a lot of stimulus that's helped that. Whether I don't know how much cash for clunkers really stimulated all of that. That can be debated. But
everything else in retail sales was up. That was the interesting thing. I don't mean to harp on that, but you go through the various sectors, take out the cars. I agree with you. Cash for clunkers was one of these dumb Washington ideas, but the rest of it was really strong, Ron.
I agree with you, but the question is, let's take the stimulus away and see if we have a V-shaped recovery.
So you're worried about sustainability?
Absolutely.
Is that your problem?
Absolutely.
Froelich, you don't agree.
I can sustain
gotta
it.
go, guys.
Of the $787 billion, only $100 billion's been spent. Washington
$100
works very
billion?
slow.
You're talking
We've
about
got $687
you're talking about that
billion
awful
left to go.
bill. They're
It's a
talking about the
pipeline.
Fed.
It's
Two
a big
different things.
pipeline.
Allison,
It's a big Y.
sustainability, Allison, before we lose you. Sustainability.
It's a big Y.
I'm sorry, I was listening to all the yelling. I missed the question. What's the question?
Sustainability of the recovery, on which I think the market is back.
I don't think it's V-shaped. I agree more with Bob Dole, which is it's going to be a slow and gradual recovery because you have unemployment high, which means it dampens consumer activity.
All right.
I don't know. I think the stock market is a discounting mechanism, Larry.
It's very interesting. I think actually it could be telling us stronger growth and higher future inflation, but we will see. Jimmy Goldman, thank you. Bob Froelich, Allison Deans, Robert Dole, and Ron Kraszewski. Thanks,